Hi, my name is Rick Blanke, Managing Partner of Blanke Schein Wealth Management, and welcome to the next installment of our Financial Foundation series. Cryptocurrencies. It seems to be the topic that everybody wants to talk about lately. Everyone wants to know what it is, and that's what we aim to do in this video. We want to talk about the basics of what cryptocurrencies are. Within the last 4 years, you've seen Bitcoin rise by over 1,900% and then subsequently drop by 43%. Cryptocurrency as a whole is extremely volatile. So this is not an endorsement to go out and buy cryptocurrencies. We just want to bring the information to you so that you can be well prepared if you choose to jump into that market. So what is a cryptocurrency? First of all, there are tons, right? So the main few that you may have heard of are Bitcoin, Ethereum, there's a few other XRP, there's a bunch. But what is a cryptocurrency? Well, traditional currency is issued by a centralized authority, like a central bank. Cryptocurrency is a digital asset that has no centralized authority. It's decentralized, meaning it's not issued by one particular location or a central bank. So what are the origins of cryptocurrencies? When did they start? So if you go back to the 90s, that was when the blockchain technology was established. But at that point, there was no use cases for it. So it kind of waited until 2009, January 3rd, 2009, actually, when Satoshi Nakamoto produced an article outlining the concept for Bitcoin. Interesting fact, no one knows who Satoshi Nakamoto is to this day. We don't know who it is. He, she, a group of people, we don't know. But one thing I did want to point out is the relationship between blockchain and cryptocurrencies. Think of blockchain think of your phone. If you have an Apple phone, blockchain would be the equivalent of iOS, the software that runs your phone. And the cryptocurrencies are the equivalent of your apps that work on your phone. So 1990s, I think it was 1991, the blockchain was created, but there was no use case for it. Not until 2009 when Bitcoin, or at least the concept of Bitcoin, was created. Now, Bitcoin is the leading cryptocurrency. Actually, as of this morning, the market cap of Bitcoin is $831 billion. So it's by far the largest cryptocurrency. There's a few underneath it, Ethereum, Polkadot, there's a ton. But the number one most well known that you always hear is Bitcoin. So what is it? Let's talk about it. So what is Bitcoin? Bitcoin is basically a digital asset that you use peer-to-peer to transfer value over the internet. So peer-to-peer meaning you're cutting out the middleman, you're cutting out the bank. People view Bitcoin, some people view Bitcoin as the currency of the future. That's a little hard to tell because Bitcoin currently is so volatile. All the cryptocurrencies are so volatile. One of the key factors of a currency is it has to be a good store of value. So you have to be able to buy roughly the same basket of goods in a shorter time frame. So right now versus a year from now, it should cost roughly the same amount. There's no way to tell if that's going to be the case with a Bitcoin in the future. So is it a currency? Possibly. It's going to have to smoothen out the volatility for that to be the case. The way Bitcoins work, though, is there is a finite number of Bitcoins out there. And there's a finite number of Bitcoins in total. So there are a few that have not been mined yet. So there's still, I think, a few million that have not been mined yet. And what is mining? Mining is basically computers conducting mathematical equations to unlock more Bitcoin. The total supply when they're all mined is 21 million. Once those have all been mined, then maybe you start to see some sort of volatility go away, but we don't see that at this point. So the idea of it as a future currency may or may not happen. Right now, it's kind of viewed more as a risk-on asset class, not necessarily even a gold alternative. Lastly, I want to discuss the characteristics between different types of cryptocurrencies. You have on one side the main cryptocurrencies, the Bitcoins, the Ethereums, the XRP, and some of these more well-known coins. On the flip side, you have these meme coins or altcoins. And those would include Dogecoin, Shiba Inu, and there's a ton of other ones. But those are two that you may have heard of. In fact, Elon Musk is a big supporter of Dogecoin. Now, they have similar characteristics, the Bitcoins and the Dogecoins and Shiba Inus. They're all decentralized. The trades that are placed, the exchange of values that are placed you cannot change them once they've been done. But they do have different characteristics. Dogecoin, for example, there's no finite number. You can have, they're created all day long every day. So it with regard to a store of value, it's probably not the greatest place to be. But like I said, Elon Musk is a big supporter of Dogecoin, and that's why you see a lot of these price hikes, because he'll tweet something out or he'll mention something in support of Dogecoin, and the price will then reflect it. In fact, Elon Musk is now accepting Dogecoin to pay as a payment method for some of his goods on his stores. Now, that's an interesting point I want to talk about too, which is there are a lot of companies that say they're going to accept cryptocurrencies. Bitcoin, Dogecoin, any of them. And it's a great headline. They look like they're pushing towards the future. First of all, most companies that announce that they're going to accept these cryptocurrencies for payment quietly change that in the months following. There are a few that continue to, but it's worth noting that they're using a payment system. Now, if I go on a website and I want to use Bitcoin to buy a product, I add the products to my basket, I click that I want to pay with Bitcoin, and then I pay with Bitcoin. It goes then to a third party who either then holds the Bitcoin and keeps it, or they immediately sell the Bitcoin and send the cash, dollars, to the company. So it's a way to get headlines, but it's not necessarily paying in Bitcoin. The company that you're buying the goods from isn't necessarily holding these cryptocurrencies on their balance sheet. Some may, but most use these third-party payment systems. So we are in the early stages of wide adoption for these cryptocurrencies, but we're far from it being widespread. Those are the main points that I wanted to touch on in our first episode in this cryptocurrency series. There's a lot more to discuss. The most important thing that we'll discuss in the next installment of the cryptocurrency series is taxes. How is the government going to tax cryptos? Are they able to? Are they able to track the trades that you place, given that cryptocurrency largely is decentralized and not able to be followed? How are they going to do this? They are working on it. In fact, as of within the last couple weeks, the Biden administration was going to issue some sort of guidance on that matter. That, of course, has been postponed due to the Russia-Ukraine conflict. So we are waiting to hear what they're going to do. But it's going to be an interesting topic moving forward. But either way, thank you for tuning in to today's episode. I'd love to answer any questions or have any conversations that you want to have regarding the topic. Please feel free to reach out to me through our website below. I'd love to hear from you. Thank you.